Welcome to the July 2nd, 2018 Advance Report from McGowan Group Asset Management clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman for the funnest 5 minutes in finance once a week, plus breaking financial news. So be sure to subscribe at YouTube. And if you want your kids' education to actually advance, this is a great link, YouTube McGowan Group. Here's what we do each week. We go through the charts and the graphs and implications for real portfolio strategy corresponding to the financial headlines. This is the 30-year U.S. Treasury interest rate going all the way back 5 years. Notice this week, 2.97%. This interest rate slammed down as institutions apparently bought lots of treasuries. There is demand for the U.S. Treasury at 3% relative to Europe and relative to $8 trillion in other debt that actually has a negative interest rate. There's a comparison. 2.53% is the rate on the 2.5-year or the 2-year U.S. Treasury. That 2.5%, we're less than 0.5% to take the duration risk of an additional 28 years. It makes no sense, and it calls into question what the Federal Reserve is doing. I would predict at some point they pause their relentless increase in the short interest rates. U.S. exports versus the dollar. You've heard lots about imports and exports. We're going to get to some specifics in just a second. But when we take the dollar index, notice there was strength in the U.S. dollar, and then U.S. exports, the correlation between the two, or the inverse correlation, you can see right here. High dollar hurts U.S. exports, and what we're seeing right now is an impact on the emerging markets. But exports still rising. That's good news for the U.S. All right, emerging market debt. This is the cheapest it's been since 2016, which was the cheapest before the crisis when the entire U.S. banking system was rendered insolvent. That's pretty darn cheap. We've uncovered discounts in emerging market debt of as much as 80% to estimated par value under control. We're going to cover more about that term and what it means as a bond fund measure, a McGowan Group exclusive term, estimated par value under control, and it helps us to make more effective decisions when designing a fixed income portfolio. All right, we've got Boeing, Caterpillar, Harley-Davidson. What do they have in common? They export. Harley-Davidson slammed big this past week, and of course U.S. sales were down 12%. That actually is a warning signal for the U.S. economy. Things may not be that rosy, because if you don't have a job, you're not going to be buying a Harley, or your wife won't let you back in the house, right? So, but the sales dropped 12%. Is something wrong? Well, we'll find out if the consumer may be stretched. Caterpillar, big equipment, a read on the global economy, but also concern about trade wars. That's what this is about right here. And we go to Boeing. Well, Boeing, also a big exporter, slammed all of this at about the time that the trade war headlines hit. Well, the Russell 2000 index, the institutions appear to think that the small cap U.S. index is an immune place, because most small companies are just domestic. And consequently, you can see this nice new high here in June for the Russell 2000, coming back a bit this past week or two. I'm Spencer McGowan, your financial weatherman. Be sure to tune in, youtube.com, McGowan Group, and there's a long extended program that covers all of the financial headlines for the week that we feel are relevant. Just go to NetWorthRadio.com. Next week, we'll be back with fresh material and education for you and your family. Thank you for joining us. My firm, McGowan Group Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.